It's another beautiful Friday morning here in the city of Lagos, the central business district to be exact. Wherever it is that you are watching from in the world, this is where we are at. We're Soup News Television, and it is my pleasure to welcome you again. TGIF, thank God it's Friday. I'm hoping that you're gearing up for the weekend. I am, certainly. I am gearing up for the weekend. In fact, I'm living in the weekend already. Welcome again to Market Insight for today, and it is the final edition for the working week. I am David Chiedu, and today we are beaming the spotlight on the country's company income tax, or corporate tax if you like, and how well we're performing in that regard. We'll tell you more about that in the conversation proper very shortly. But before then, let's first take a look at what has been happening during the course of the week on the trading floor of the Nigeria Exchange Group. So going straight to it, at the end of Thursday's trading session on the Nigerian Stock Exchange, a total of 390,546,861 shares in 9,615 deals, corresponding to a market value of 7,974,123,891 shares were traded. Compared with the previous trading day, that's Wednesday, of course, September 11, Thursday's data showed a 35% decline in volume and 9% decline in turnover. Now, the current market capitalization of the Nigerian Stock Exchange is 55.8 trillion naira. In the aggregate, 119 NGX listed equities participated in trading, ending with 27 gainers and 22 losers. The FBN holdings led the gainers with 10% share price appreciation, closing at 26 naira 40 kobo per share, followed by Keverton Offshore Support Group going up 10%. Flour Mills Nigeria went up 9.99%, and RT Briscoe went up a positive 9.93% as well. On the losing side, Dar Communications came out last with an end-of-day price depreciation of 8.86% at 72 kobo per share, followed by Eterna going down a negative 8.14%. Universal Insurance Company went down a negative 7.69%, and Sovereign Trust Insurance went down a negative 5.97%. Access Holdings recorded the highest volume of 80 million traded shares, followed by FBN Holdings at 52 million, United Bank for Africa UBA at 31.1 million, and Keverton Offshore Support Group at 23.7 million. Now, regarding the performance of the NGX market indices, the benchmark NGX All-Share Index climbed 310.13 points to close at 97,025.17, representing a one-week gain of 0.85%, rather, a four-week loss of 0.08%, but an overall year-to-date gain of 29.76%. Now, other remarkable indices that performed were the NGX Top 30 Index, the NGX Banking Index, the NGX Pension Index, the NGX Consumer Goods Index, the NGX Premium Index, and the NGX Main Board Index. And that's how we fared so far on the trading floor of the NGX during the course of the week. We'll take a very short break. Then, of course, we will get into today's conversation proper in a moment. Don't go anywhere. Welcome back to Market Insight this beautiful Friday morning. Now, there's been a jump in our tax revenue recently, talking about our corporate tax or company income tax, if you like. So we're taking a look at what this means for us, the economic implications therein, its overarching impact on the wider economy. Now, Nigeria's company income tax rose by 151% in the second quarter of this year, 2024. It surged by 150.83% to 2.47 trillion naira in the second quarter of this year, from 984.61 billion naira in the first quarter of this year, according to the latest NBS report, talking about the National Bureau of Statistics, that is. Local payments received were about 1.35 trillion naira, while foreign CIT payments contributed 1.12 trillion naira in the second quarter of this year. Now, in terms of sectoral contributions, the top three largest shares in the second quarter were financial and insurance activities with 15.53%, the manufacturing sector with 8.99%, and the information and communication with 7.84%. Now, in July, the Federal Inland Revenue Service, FIRS, said that the number of taxpayers in the country has increased by 170,000, recording a 20% improvement. So this would mean more revenue, as it were, some would say. But what are the overarching implications, as I mentioned earlier, for the economy? We'll examine these and more on today's edition of Market Insights. And we're joined this morning, by Mr. Bolahon Olojede. He is a finance expert. It's a pleasure, very much so, to have you join us this morning, Bolahon. It's nice to do this via this platform as opposed to having it done on the radio platform as we used to do back in the day. Welcome.
Yeah, thank you. Nice to be here.
Bolahon, can you unmute your device? I can barely hear you.
Uh-oh. Hello, can you hear me now?
Yes, I can hear you, but I can't hear you, but I reckon you can hear me.
I can hear you clearly, so I'm wondering why you cannot hear me. Okay, let me do something.
Is take a very short break. When we come back, I reckon that little issue would have been corrected so that we can hear each other at both ends. Well, so we'll take a short break and we'll come right back. This is Market Insight. If you're watching, stay very close to your set. Welcome back to Market Insights this beautiful Friday morning. Apologies for the hitch earlier. We're getting straight into the conversation. Yes, Bolahon Olojede is standing by to join us further. Bolahon, can you hear me now?
I can hear you clearly, but I don't know if you can hear me.
Yes, now I can hear you. There's feedback from your end, and I can hear you clearly now. It's nice to have you join us on this platform, as opposed to how it used to be back in the day. It's really lovely having you join us.
Nice to be here.
So we're talking about our, jump, or the jump rather, in our CIT, or company income tax, or corporate tax, as it were. I reeled out the number earlier, and on the one hand, it seems like it's a good thing, but there are some concerns, attendance concern, if you want to put it that way. But first of all, let's start with the basics very quickly. In your view, why do you think we're seeing this surge right now? That's one. Two, there have been recent, tax reforms to encourage, outfits or business outfits in the country, talking about tax incentives and tax exemptions and whatnot. What's your own assessment of this, of the impact rather of these arrangements? Does it have any direct correlation to what we're seeing now vis-a-vis the surge?
Okay, increase in the amount of taxes would likely be a mix of several factors. One of the factors was part of what you also mentioned in your introduction. The agency had reported an increase in the number of taxpayers. There was a mention of about the numbers moving up by 20% to 170,000. So essentially what has happened is that the agency has succeeded in bringing more payers into that tax net. Because there is a 20% more payer, then the amount of taxes will also naturally go up. The other part is the continuous improvement in how the agency deploys technology for tax collection. So one of the cardinal of taxation is convenience. So the payer of the tax, it must be convenient for him to make the payment. If it is convenient, it's an established fact that it drives up compliance. So more people are able to pay or willing to pay simply because it is now easier to pay. You can sit in your office, file your return, make your payments, and that is something that encourages compliance. The other bit, which might have surprised some people, is to say, look, in an economy where a good number of corporates, especially in the manufacturing sector, are declaring losses. Not just manufacturing, even in the telecoms, we've seen giants who have even literally had the entire capital wiped out by losses, right? Heavy losses. And the losses have continued anyway for that particular player. So it could be surprising then that, so where is all the money coming from if the giants are crying? But the reality is that while a sector is suffering massively, or maybe in the process of gradually recovering, there are other sectors that are not exactly that much affected. If I'm producing crude and exporting, for example, what is my business with the raw materials that were not that dollar would not allow me to get at the right price? I am even the one producing the raw materials, and I'm earning foreign exchange for producing it. So I might not be affected, unlike the manufacturing guy who is importing this, importing that, and has to deal with the dollar problem. There is also what many will have observed from the financial services. So while all this was going on, the financial services were busy literally minting money. So it was as huge at the end of last year that even government started talking about windfall tax, how government wants to also say, look, you guys have made obnoxious profit. I also want to come into that space and take some of this super profit that you have made. And that has not relented. I've seen the half year for EcoBank. GT Bank had recently published his own unaudited half year as well, with profit literally tripling, and in such a quantum as has never been seen before in the country. So it's a mixed bag for the corporates. While some have been on the low side of things, others have been literally minting money, like I said. So all this will combine together to help shore up the tax revenue for the government.
Earlier, you talked about convenience, in payment of these taxes, as you were. There are also some, joint concerns in this regard that some of these taxed firms, that find it slightly inconvenient might pass on the tax burden to, consumers, which may in turn impact inflation. What do you make of this thought?
Well, it's a bit of okay. I will speak to that from two different dimensions. I will speak to it from the perspective of, say, VAT. Then I'll also speak to it from company income tax. Company income tax is charged on the profit. So you must have even made the profit first before a percentage is applied to your profit, 30%, for you to pay the taxes. So it is assumed that whatever cost you carried has already been provided for and set aside. So it is not accessible to taxation. It is the excess above your cost that have been accessible to company income tax. On the VAT side of things, especially as it affects SMEs, what you may have is a situation in which these SMEs have paid tax on their own input, but are unable to find any means of recovering these taxes that they have paid on their own input. So what they automatically do is to try and pass on what looks like an additional cost of input to the eventual consumer. And I want to believe that this is part of what the presidential task force, led by Mr. Oyedele, is working on in the agenda to transform and streamline our taxes, our many taxes. I learned we have about 60 or thereabout of them, so that the tax doesn't become burdensome on these SMEs, and at the same time, it is able to ensure that people who are making the more are also able to pay the more in taxes for the common good.
Now I'm going to take it from take this next one from what you just said. You just alluded to what the federal government through the tax reform committee is trying to do, which is to streamline our taxes, our very many taxes, to a single-digit tax. We want to operate a single-digit tax system, just like you said, and rightly so. This is to confirm that we have about 60 different taxes, and then I reckon over 200 unofficial levies across the board, which the federal government has seen as a bit of a sour spot, so to speak, economically speaking. And so that's why they're looking to harmonize all of it and compress it, or if you like, streamline to just a single digit tax. Now, considering this and all the other, there have been businesses that have, that are defunct right now. But even at that, with that particular token, we still have more businesses coming on stream. Otherwise, how do we have this tax surge or this tax jump? So considering what the federal government wants to do with the, streamlining of our tax, how effective, in your view, do you see it being medium to long term as far as, tax compliance and ease of business is concerned?
It should significantly enhance tax compliance. It is a tested cardinal, tax cardinal, a pillar, a recognized way to drive taxes, that you must make it convenient for the people. Where people have to deal with 60 official taxes and several other non-official ones, which I choose to call them extortion in the name of taxes. It is not, it doesn't make things convenient. But if we're able to streamline it and communicate very firmly and comprehensively what we have done, it will take away a whole lot of the extortion part of things, which reside largely in the unofficial taxes that are available everywhere. So you even have situations in which different levels of government is fighting over the same tax. I remember we paid for, we were going to use a place for parking, my office. And they said, oh, that is a local government thing. You need to see the local government. After we have paid the local government, the state showed up and said, that is our jurisdiction. You also need to pay the state. So you start asking yourself, I paid the local government, I'll pay the state. That's duplication. Those kind of taxes should reside in a specific place. And once you pay it, you've paid it. The same thing happened with, there's a tax that is associated with locating your building some meters to the waters, to the water body. And you have a situation in which both the state government has an agency to chase you around for that tax. Federal government also has an agency that will chase you around for the same tax. So what all that will lead to is people just saying, look, what Mr. Man who has come to harass me for tax, I don't think I have anything to do. Just take this money and go away. And then those people will take the money and walk away. And you see, people have parted with money. So as far as they are concerned, it is still part of the tax. But the government does not have the benefit of those taxes. It is extortion. Streamlining will help us to deal with all those kind of matters significantly. It will never be totally eradicated. But if you can take something from 100% to 30%, that will have been significant, in my opinion. And it should yield increased revenue for the government if we're able to implement with discipline. I've forgotten the second question.
All right. I want to ask this question on a very, very light note. Have you been extorted by any of the fellows in uniform, well, so-called uniforms, on the road for one reason or the other? Well,
I guess sometimes when I went down and they see my white beard, they're a bit scared about extorting. But in the real sense, I've witnessed all sort of extortion, and I've also been extorted in certain extreme cases myself. So those things are there. While in reality, our tax to GDP ratio is so low, our tax revenue is low. But our people are complaining because people are still paying all sort of costs here and there, this levy, that levy, even if most of these levies are not getting to the pocket of the government.
Right. Now, let's. I'm going to take this part you just spoke about, the fact that we need more money, the fact that our revenue is, quite at a very low ebb, very, very shortly. But I'm going to ask you this again. On the surface, for all intents and purposes, it does seem like, our income is growing based off of what we've spoken about with the tax surge and whatnot. However, when you take a look at it from both the nominal and the real income, can we actually say that that is the case? Because with the former, talking about the nominal income, you cannot particularly say that you have quote unquote money unless you have adequately adjusted for inflation. Then you have the real. So based off of these premise, can we say that our income is really growing, Belang?
I think one of the things that would be nice to see MBS do it's also to give us numbers that are normalized for the impact of inflation. And when you do that, in certain instances too, we might try to normalize our numbers with exchange rates in certain instances. And that is important. I remember yesterday I was having a discussion about a certain result released by a company. And this year, vis-a-vis last year, profit after tax has tripled. And one of the questions that came up in the course of that discussion was, has it really tripled? What was the exchange rate at the end of June 2023 vis-a-vis end of June 2024? So we had to do the numbers to be able to establish that indeed there was growth. It might not have been tripled. It was literally almost double anyway. But those are factors that begin to give us a different complexion about the revenue issued. So normalizing them might show us, and this is not just about the current situation. Some of the revenue growth that we have spoken about, even over the years, by the time we normalize them with inflation, by the time we look at the foreign exchange impact on those revenues, we may be surprised that we are more or less, those revenues are more or less stagnated or barely grew in spite of what they look like in terms of absolute numbers. So absolute numbers are never enough to describe growth, which is why a particular figure relative to another one is a better description than an absolute number in growth. If we normalize this, like you said, we might find out that it's either there are no real growth or the growth are much more moderate than we have presented.
Interesting submission. Now, back to what you said a moment ago about our revenue and the fact that we do need that. And that is the truth. We need money. Nigeria does need money. Just like every other business entity, you need to pump in money to be able to run the business and consequently profit from said business. But, taxation, as you were, seeing as it's been there since time immemorial, is one way that the government, any government actually, can, raise revenue. But there are certain questions that have crept out of this particular premise. Lots of stakeholders have asked, both those playing in very significant sectors of the economy and those without, who you might want to consider as outliers. One of such people or such persons will be yours truly. I've also asked the question, is there a way that the federal government can raise revenue outside of tax increments? We're going to talk more about this after the break here on Market Insight very shortly. Do join us. Welcome back. Thank you for staying tuned to Market Insight this beautiful Friday morning. We're still talking about our corporate tax success, so to speak, and the surge in the numbers and the wider economic implications. Still with us on the program this morning is the finance expert, Bolahon or Lojede. Thank you for staying with us, Bolahon. Now let's go to what I hinted a moment ago before we took that break, the fact that we need more revenue and, whether or not we need tax increments. Now, Mr. Oyedele, that's Taiwo Oyedele, the chairman of the TRC, the Tax Reform Committee, that is, he recently disclosed that his committee has recommended the exemption of small businesses and, the poor, as it were, from tax payments, which is a good thing in and of itself. But he also disclosed that there are plans to increase taxes by 2.5% from next year, because it's currently at 7.5. So it's going to be at 10% rather, from the year 2025. Back to the question I asked, do we need to do this in order to raise revenue? I mean, our fiscal performance benefited from the FX liberalization last year, but we still suffer from the same problem, which is revenue. So it's a no-brainer that we do, in fact, need money. Now, let me cite a case study. The United Arab Emirates, the UAE, they are one of the lowest tax nations in the world. As a matter of fact, they do not impose income tax on their citizens. What they only need to pay is 5% VAT, for goods purchased or services rendered. Now, the UAE's corporate tax is about 9%, which it only started implementing about mid last year, right? Now, this is against the 32% corporate tax in countries like Portugal, 30% in countries like Germany, and here in Nigeria, 30% as well for larger companies as you were. So, do we need to increase taxes? What is the UAE, or what are countries like the UAE doing that is working for them that we need to, learn and implement?
Okay, it's an interesting choice of example because in the real sense, it could be argued one way that UAE should not be an ideal comparison. The entire population of UAE is about half of Lagos. And at the same time, they produce oil resources that is probably about 3 times what Nigeria is doing. So when you have that kind of a situation, you need to start asking yourself, there's a country that is about half of Lagos in population, and they produce more oil than maybe 2 times or more than 2 times what Nigeria is using. It's not an apple for it's not an apple for an apple comparison. At the same time, however, they have done certain things that we can learn from, and we must learn from it. Number one is that their own state oil company, the way the oil asset of that country is managed, should be an inspiration for NMPC to learn from. Our own NMPC Limited, the reason why it became limited was to see, to have it run like a business. As we speak today, it is only limited largely in name. We cannot say that it is running like a business. So that is an important part, that's a lesson that we must learn, how those state oil companies are able to help to manage effectively and profitably the oil asset, the oil and gas asset of the nation, vis-a-vis what is going on in the Nigerian equivalent of such agency. The other part is that the UAE has developed other things significantly. One of which is what it has been able to do with Dubai, and then the tourism that it built around all of that. It's a very significant source of income. As a matter of fact, you have a situation in which even a museum was put in Dubai, and everything that was in the museum was bought from every part of the world. So they were not even original to that location. Unlike in Nigeria, where you see the kind of work that has been done in Ife, in all those excavations, the Benin works, and all those other things that are a museum, for example, a value. How much are we making from all of that? When the 1 million visitor visited that one in Dubai, it made history. We are here. How many visitations has the Ife Museum or where the artifacts are stored in Benin? How many visitors has it been able to attract? So everybody wants to go to Dubai. When they said, "Oh, Nigerians were being denied visa to Dubai," it was as if the whole world was going to go down in Nigeria. Everybody started saying, "You see, that is what Dubai has created, an appetite for consuming the tourism in that country, and Nigerians can consume. We are a consumer nation, so we were unhappy that we are not able to consume tourism in Dubai." Meanwhile, when you see the tourism assets that are in this country, you must challenge us to say, what can we do? Most of the tourism assets in Dubai were literally created. They were not even natural. Here, we have the natural ones. The mountains at Ekiti. Or you want to talk about the plateau or the water in Taraba. Some of the most beautiful places on earth are in this country where we are, right? But we're not generating anything, literally nothing from tourism. Of course, I know there are factors there and there that are militating against that. So
now,
when we're doing
we're going to talk about those factors. I'm very interested in those factors. I'm very interested in the factors which you are asking about. That's the ones causing these things. However, you've raised a very interesting point in our tourism industry, which many would say isn't really doing much. But then again, symmetrically, there is the creative and there's a creative sector, the creative industry here. I will cite you an example shortly, because we have the likes of India that are, exporting talent. And I said last year they earned about 120 billion naira from, diaspora remittances, as you were, as against our own 20 to 25 billion. And I find that pensive. For all intents and purposes, this is also off the back of what you've just said, because we have enormous talent here and enough creative heads here. We're talking music, you're talking movies, Take Hollywood, for instance, and one might say it's not a very, very fair comparison. But then again, I would bring it back to the African continent. But let's stay with Hollywood, for instance. It remits a ton of, cash for the U.S. economy. A lot of what is contributed to that sector, to the GDP rather, comes from that particular sector. It's a multi-billion-dollar sector. Now, just one movie alone, coming to mind just off the top of my head, in 2009, Avatar, that was produced in 2009 and released, as at March earlier this year, that movie was said to have grossed a total of about $3 billion, almost 2.9 or thereabouts in total, making it the highest grossing movie of all time. Sequel to that, 10 years later, in 2019, there's another movie again, Avengers Endgame. That particular movie is a close second, about 2.8 or thereabouts billion US dollars. The second, this also was recorded as an early this year in March. Now you put those two together, you consider the fact that that is coming from just two movies in a sector that produces, tons of movies annually. Then you have our own industry back here that is thriving and that can actually be, be harnessed. But we aren't particularly doing that. We're still dwindling in, the 1 and 2 billions per, 6 months or per annum, as you were. Then, like I said earlier, if the USA and Hollywood is an unfair comparison, how about here in Africa? As a matter of fact, Nigeria still ranks low at about 1%. In its ability to earn government revenue from the creative sector compared to South Africa that has about 12.5%. So back to the question you asked, what is really the problem and what are the limitations, preventing us from milking these sectors that could be cash cows as opposed to just depending on maybe raising taxes or the oil sector, which we've been depending on for God knows how long? Your thoughts?
Okay, there are a lot of things that we still need to do to create a more viable environment for this industry to thrive. Apart from the general economic circumstances, so whether I will stand up and go to the movies to go watch, there are economic circumstances that are associated with that. That is on one side. On the other side are issues like how our intellectual property environment. So a movie could be out, and then before you say Jack Robinson, it's already something that is available for someone to download and watch on his phone. If he can watch it on his phone, and he can watch it paying nothing other than the data for downloading that, we also need to talk about, so how much revenue has the intellectual property created for the owners of that intellectual property? Or is it that 70% of the value has been eroded by the poor intellectual property defense environment? I remember several years ago, I was somewhere at Computer Village, and a particular artist, a particular Nigerian artist, was busy going around the market to confiscate his product that had been, counterfeited and being offered in the market, but all by himself. And well, interestingly, that particular artist has literally left the country. So I asked myself, if the man has to go that length to be sure that at least from this my intellectual property, make a fee, make small money, why must it be him chasing it up? It shows that the environment needs help as far as protection of intellectual property is concerned. So I've spoken about the general economic circumstances, now the intellectual property. Then we now need to also show up the quality of what we do. I have sat down and watched some of the some movies, that basic translation, to find someone who understands English language and could translate, because the movie was in a local language, so there is what do you call that translation that you scroll on the screen, was in very poor English. And I'm saying, why will you want to do this? So the quality of the works must improve. There must be an improved intellectual property protection environment. And then as people's general economic condition also improve, they'll be able to consume more. And government has a role in literally a major role to play in this. If our protection of intellectual property is going to ever improve, government has a strong role in it. The general economic welfare that could determine the disposable income for me to consume that movie that you have produced has to increase. Incidentally, some other people are coming into that market and taking the slides, the Netflix of the world. And anyway.
So I was going to just follow up with what you just said, still on a lighter note. The terrible subtitles that some of the movies have. I've seen some, and all I could just do at the time was just put both my hands on my head because it was abysmal. So I understand what you're talking about. More work needs to be done there. But it's it's funny sometimes when you see that. It just gives you that comic relief. But anyway, with this particular issue, the federal government, by the way, are looking to, pay some attention to it, if you like. So through the Ministry of Arts, Culture and Creative Economy, they unveiled plans recently to generate about $100 billion from the creative sector, having identified about 14 key areas, or 14 key initiatives that are aimed at driving the sector growth and significantly increasing revenue by about 10 to 20 billion naira, as you were. But away from that, let's take a look at another issue as we close. If you can, do this very quickly. Debt capital. That's another issue. Now, Price Watercooper have given their suggestions, or given their thoughts on that as well. We hold about $900 billion worth of debt capital that is locked in residential real estate and agricultural sector. Again, as I said, it's according to PwC. Now, it's suggested also that the federal government's monopoly in these sectors, as well as in infrastructure, talking about railway pipelines and the rest of them, needs to be broken so that investors can have some motivation, if you like, to commit equity funds into them. What do you make of this?
It's a very shameful thing that we've not been able to make any progress with respect to real estate that are wasting, I believe, across the country, government real estate. Lagos in particular carried such a huge load of this by virtue of having been the former federal capital, federal capital. In front of my office, it's a building that almost makes me cry every day on Lagos Island. Huge building, empty, rotten away. 2 buildings away from that is another extensive, what used to be a house on federal government offices, empty, up top to bottom. And they are all just sitting there. And they've been sitting there probably for 2 decades. When did the government move to Abuja? Some of those properties have been sitting there like that for 2 decades. Of course, the popular one, Federal Secretariat, I don't know how much use that has been put into. And all these properties are just everywhere. Is it impossible for us to sit down? Maybe it is the state and the federal government that will sit down and find a middle point to unleash the value that are locked up in this property. Why will anybody want to have property idle for 20, 25 years and is happy to let it be like that? I don't get it, honestly. It is a reckless abandon that does property. And we can unlock it if only we can sit down and agree. The second part is that by the time they even agree now, to implement will be another problem, because everybody wants to sell property to their friends and cohorts without due consideration for the Commonwealth, for Nigeria as a country. This is where the problem is. So PwC report is perfectly in order as far as wasted real estate is across everywhere. And with modernization, where some of these properties, this property today can be put on the GIS and all of those, and they can be mapped, and you will have electronic titles being dissipated. There should be no reason why we should have properties that are today just housing criminals. That's what those buildings, a lot of them are doing, housing criminals and rotting away. 2 decades, 3 decades, they're still there sitting. The other part you mentioned is in the space of infrastructure. And again, I'm 100% with PwC. However, I think government is starting to make some changes along that line. We've seen what they have done with electricity. So the generation company today will be private sector, distribution. There's a lot of involvement of private sector. It's only the transmission that is 100% government. And guess what? That portion that is 100% government is the weakest link in the chain. So, which is also sending a message that we need to ask ourselves if the generation is much better than it used to be, and distribution is better, and the one that government has is the worst part of that chain, maybe we should take another look at it. But it's not just electricity, it's also about other infrastructure. And now we can bring both private capital and management into that space to help develop the space faster than government can ever do.
Thank you very much, Gbolahan, for your thoughts on the program this morning. In case you're just joining us, I'm afraid to say that you have missed quite the chunk of it. We've been talking this morning about our corporate tax surge. According to the NBS, it rose to 151%. This would, of course, indicate that there's been more compliance and more businesses being captured, in the tax net, as it were. This, in some regard, would signify an increased revenue, if you like, for the Nigerian state. However, the questions remain as to whether or not the figures are actually what they seem, considering what we talked about earlier about the nominal income and the real income. Then, of course, there's the other question as to whether or not taxes need to be raised per time periodically in order for the government to raise more revenue. Of course, guest Bolahan has talked about a lot of things, ranging from looking inward, which would include the tourism sector, the creative sector, and other sectors, attendant sectors rather, as it were, so that we can actually generate the revenue that we need, as opposed to doing the former or relying on the former to be able to raise revenue. Of course, we're hoping that the powers that be would focus on these recommendations and look inward so that we can have more money, because there is no doubt, in fact, that we do need money. Many thanks, Bolahan Olojede, for joining us on the program this morning. We do appreciate your time. That's Market Insight. But before we go, let's quickly take a look at the currency market today. Across the week on the official market, the Naira to the dollar's trading has been thus far. Monday, trading at 1,575 Naira. On Tuesday, it stayed the same. On Wednesday, it stayed the same. Thursday and Friday stayed constant at the official market at 1,575 Naira. That's what it's looked like so far. Many thanks indeed for joining us on Market Insight today. Do stay tuned. Some more fantastically engaging programs coming your way up ahead. Stay tuned for the news at 12. I am David Chiedu. Until next week, to have a fantastic weekend.